Welcome back to my channel. Today we are going to discuss about price actions. When there is no volume, how to interrupt the market. This is what most of the people misunderstanding the concept. Once the volume is coming, they will be try to enter into the trade, or they will do what kind of thing is, we should not react to the market. This is what very important. That reaction is nothing but trapping. Okay, a normal concept, reaction is nothing but trapping. So as per our opening trade, okay, some people actually call me and asking, sir, in between market there is volume is coming, and how to interrupt those things, and it is showing red candle, but the point is we should not interact market in between, okay, using this system. What is this is how to take a opening trade with proper risk reward. Our risk should be very low. We should be on the initiator point of view. This is what important in trading. Okay, now, so in between, if we are getting volume selling nothing, we are entering the trade, we are getting a decent profit in the sense, a stock 0.5 to 1 percentage is a decent returns. Okay, so that returns we need, at least we need that. For that only we are uh, we need to aim in this market. So focus on that, don't focus on any other thing. We need a profit. That too, our entry should be not on based on a retailer point of view. Okay, I'll say something, what it is happening and how retailers coming and how we can interrupt the market. Everything I'll be explaining in this video. Okay, so day by day you can improvise the volume concept. You can able to active on yourself independently without much risk, without taking much risk in this market. That is what important. What mostly people are doing is they will try to take a risk. If you ask stop loss, they will not say the stop loss. Let's see if it is come down. Let's see next, they will leave. And if, since they are trading without stop loss, it will affect psychologically, and market will revenge you easily. So always remember guys, stop loss is most important. Okay, that also you should never forget in this market. Okay, now I'll just explain about this today's price action based on our volume concept. Okay, okay, how to interrupt yesterday data and today data, how to bring this sentiment. Okay, that also I will be explaining. I'm not getting data properly, 1 minute guys. This is Adani Enterprise chart. As I told, this is a new concept of volume I want to discuss in this video. If you see, initiator point was traveling from 12 o'clock till the market end. Can you see this? Completely it is one side. Basically, most of the cases, market will try to change the direction. It will not keep on traveling in one direction. As an intraday trader, this we have to be very much familiar in this concept. Okay. Now, let us see what a retailer point of view, how they will be try to do this trading, and how we are going to do in a different way. That is what important. Okay, this is actually a top. So what a retailer might be doing is, they will be trying to buy at the opening, or this high broken, once broken they might be chance that retailer might buying. What is the reason is, yesterday market last came a volume, and here we are getting a good candle, so that might be their cases, they will be thinking of buying. Okay, always remember guys, 1 2 3 triple top, this double top, triangle pattern. Earlier I was discussing about the triangle pattern. Now we should trade those pattern, not like retailers. Okay, not like a textbook. That is what important. That is enough to make a superb returns. Nothing else is required. Okay guys, so here there might be a buyer, chances are there. Then where there might be buying is, Above this yesterday high, the breakout was happened after first candle breakout has happened. They will be trying to buy here. In this case also you can see market shoot up like anything and sudden spike downside. This will make them jerk in this market. So what it is indicating is this is not a right entry. A right entry should be market should give a decent returns without any jerk kind of thing. Okay, so whenever we are participating in a retailer trap or retailer point of view, we will be getting these type of jerk, and we will leave the market in the sense we will leave as per management, either a stop loss or target. We cannot increase our ages. So what we can do is, I'll tell you the concept of a dry volume trading. Okay, how to trade the dryness in the volume. Simple, as I told, morning trade we have to take in morning, that's it. Now, very first thing, first candle we are getting no red volume, so it's not a pressure. Okay, now we are not going to initiate here. You know that very well that this is a triple top. So one chance of probability is here liquidity is there, so liquidity might be taken off. That chances are there. One thing, okay, number one, remember. Now second thing, price was coming down. Here you can see a volume was no volume, and again price was coming down to near our pivot. Here also volume was not there. Can you see here? Now here we are getting a rejection type of thing. Okay, but volume was dry volume. So as a initiator, what is this indication is, from yesterday noon to till complete day it was in red in the sense it was in weakness. But here we are getting a high volume with the buyer effect. So this, there is a buyer on the bottom. So this is where you have to remember, when there is a buyer on the bottom with a huge volume, next time we might not get a volume. This is the point you need to note down. Okay guys, so market is coming down without volume, that is indicating there is not interested to sell. Simple. So in this type of candle, in this type of rejection, we can try a trade, provided our stop loss should be below this red is nothing but yesterday's low. So just a small stop loss we can keep, and we can wait till where we can wait. That is what important. I'll tell you, once market is spiking up, okay, once this triple top is cleared, this triple top is cleared, this is where we need to, this is where, once this top is broken, what retailer point, okay, retailer point, what will happen, it will try to trap on either side. Now you know clearly that this is the initiator point in the sense, once we are getting yellow and green, this is where market initiator point is activated. Now right now market is keep on having a consolidation kind of structure. Can you see here? Consolidation kind of structure. Now here also you can see it's having a bullishness. Here also we are having bullishness, but what thing is missing is volume is missing. Volume is completely dry. So in this case what can happen is market can be a sideways move. Okay, for that purpose only I am telling, if we are entering earlier as a initiator point of view, we will not get that much panic towards the market. We can travel once we are getting this spike. Okay, from here to this spike it will be almost 1%, so we can book, or in this rejection we can exit our trade. Simple. Why we are exiting our trade? Because this is where a retailer point of view trap will be happening. Whenever there is some kind of a huge rejection kind of thing happening after our trade, we can exit. It's not an issue, provided we have to be an initiator. If we are not an initiator, then it is difficult to participate in this market. Okay guys, so hope you are clear about this price action with the volume analysis. Okay guys, so this is how we will be trading in the dryness of volume, and how to observe the market in right way.